Hello, everyone. Welcome to the stock specific class here for Thursday, May the 5th. Happy Cinco de Mayo today. I hope it's a happy day today for most of you. Before I get started, if you have any questions during the week or any questions that I don't get to in the live class, make sure you send those to Jerry at traderspro.com. Another announcement, again, I mentioned this on Tuesday, but I'm going to be out of town next week, and I am going to be doing trainings, but I'm not going to be doing live training. So I'm planning on doing the market update recording sometime on Tuesday, and then we'll just post it, and then I'll do the same thing with the stock specific class, although it'll probably be more like Thursday. Either Thursday late afternoon or Thursday evening, that I'll do that recording and get that posted. And that's why I'm not doing the live class. I don't have a set time schedule those days to be able to commit to. So I can't tell you exactly when the recording will be posted, but it should be around sometime those days. But if you have any questions leading up to those classes that you want me to maybe address in the class, make sure you email that to Jerry at traderspro.com. Now, if it's something that's just, a question that is just, that is more specific to you and maybe doesn't have a general purpose for the whole class, I may just answer your email directly. But if it's something I feel like would be nice for the whole group to learn as well or know, I'll try to address it in the recording, that particular recording that day. So just make sure you get it to me before Tuesday or before Thursday, so I can incorporate it into it. All right. Obviously, a lot's happened in the last 24 hours, although it shouldn't be too surprising because we've talked about it so many times about this range that we've been in, the importance of this range, and hopefully you're starting to see that because as we look at it today, we are just bouncing off of these critical levels that I've pointed out for months now. I mean, we've been looking at these for a long time, and some of you have maybe fallen asleep in class because it's like, oh, Jerry's going over the same crap again, the same spots. Okay, we know these spots are there. I understand that, but sometimes I've got to pound it in everyone's heads of how critically important these areas are when they become important. And it's definitely something that the market is reacting to. We got to pay attention to it. And we've got to wait until the market commits to a particular direction. I don't want to overreact to what happened yesterday, and I don't want to overreact yet to what happened today until we break these levels. We'll look at them here in just a second, again, for the 50th time. So if you want to take a quick nap, for those of you that are sick of it, go ahead and do so now, or go make yourself a sandwich and come back a little bit later. And so that I don't want to upset you if so at least go do something productive and fill your stomach up or something like that while we're talking about it. But for those that are newer and that haven't seen those critical areas yet, it's important that they see them, and we're ready to react to them. Now, because we're still stuck in this range, a lot of that we are going to go over some stocks off the list, but we're just going to be throwing them into the watch list. We don't want to be committing too much capital to the market in these conditions, particularly if we do end up getting that panic sell-off. Now, if we do get that panic sell-off, we've got a big watch list that we've been preparing, and so we should be able to start jumping in, taking advantage of that. And you'll be glad that we've been patient. We haven't done a lot for the last little bit, because hopefully you've saved your capital and you've got a lot of capital to be able to deploy at that time. And not that we're going to be able to predict the exact bottom, but you'll have a better feel of being closer to the bottom than where we are right now, and that'll benefit you at some point down the road. It'll benefit you tremendously in the amount of money you'll end up making later on. As far as the direction alerts, again, now remember these figures update overnight, and so this is not taking into account the sell-off today. We've already been moving from that 5 level. I've talked about this, how now we're starting to dip down into this range here where we're actually moving the needle. We'll probably see us get closer to this 1 over here, which means we're getting very close to moving into bear market territory. And I would expect that we're going to, obviously with a panic sell-off, we're definitely going to get into that bear market territory. But we're definitely trending in that direction. We want to make sure we're aware of that. We're not in an uptrend. We're not trying to pick a bottom here because there could be further to drop. We haven't had that panic sell-off yet, but I just want to point that out, that it's trending in that direction. Same with momentum. You remember on Tuesday, we were showing some of these extremes. I said, again, as we went through all this stuff, I said, we can't ignore the fact that some of these indicators are showing the market is oversold. As bearish as I was, and I still am on the market, that's why we look at these indicators to try to take a little bit of to try to cut through some of the biases that we have. And when we were sitting over here at extreme levels, extreme oversold levels in momentum, and some and the other indicators I'll show you here, it was saying, hey, yes, we're in a downtrend. Yes, you can believe that the market's going to continue to move lower, but as of right now, we're really oversold. We're probably due for at least a little bit of bounce or moving sideways a little bit. And actually, we've kind of been doing both. We've bounced, and if you look at the last week, we've been moving kind of sideways. And you can see we alleviated that oversold condition. Now, within a downtrend, you'll see this all the time. You'll get extreme. So we reached a sell-off point. We're getting extreme. We're over here on the extremely oversold. What happens? You get a little bit of a bounce. It moves the needle back off that extreme range, and then it alleviates that, gives you a chance to continue to move lower. This thing could bounce right back over to extreme. We could bounce again, move back, and then drop again. So it's kind of helping us within this stair step right here. Okay. Same thing happens within a bullish trend. You'll see me do this in a bullish trend where we'll reach an extreme level over here on a move up. Let's kind of draw a little bit of a stair step here. So we have a move up. It'll tell you it's overbought. You don't want to be buying in right there as far as the timing, because there's too much that can happen that could, at that point, anything that it could be perceived as is negative or weak could cause it to pull back a little bit. And sure enough, you'll get a little bit of a pullback day or two in the stock. It'll cause the stock to pull back a little bit, but it also alleviates that overbought condition and then allows it to move back there as it continues to move higher. So when you start talking about very near-term indicators, again, that's why there's like 50 things we're looking at in these updates, because we want to gather as much information as we can. We want to know what the general trend is. We want to know about the timing as best we can of when to enter that trend. When are we in kind of that ideal situation? And it wasn't an ideal situation to be shorting the market right here, even though it's been trending down because you were due for that little bit of a bounce. Now you've had that bounce, you've kind of rolled over again today. We're probably going to be heading back this way. That would be a better area if you were looking to short the market. That'd be a better timing is to short the market in that situation. Okay. Hopefully that made some sense. Breadth indicator, same thing. It was in the high range. It moved into trending. Again, after this updates today, when the sell-off, unless we come off the lows in some major way going into the close, which I don't anticipate, this should start to move back in this direction here. And it shows us right now that we're not oversold. So we could have a lot further to drop here to get to that extreme level. And then the sentiment indicator moved, it was in this complacency area, moved back towards the extreme, and now it's going to start moving back. I would expect that we're going to get into at least this trending area when the market starts panicking. And actually, technically, we should at some point get into the fear area as well. And we're just not there yet. We haven't had any of these sell-offs that have been anywhere close to even getting into the fear range. And we're going to have to get in that range to know when we're in an extreme or that panic mode that I keep talking about. So keep watching that and help let that indicator tell you when we're getting closer to a bottom. Buy-sell ratios, these were pretty wide right here, and then they've come a little bit closer together. I mean, not too much closer together, but they've alleviated that extreme condition to where they could shoot right back, and they probably will shoot right back into these levels after today. But they still are generally pretty wide. So although we've alleviated that extreme condition, probably not enough to where you can get right back to it in a day or so. And so anyway, that's kind of that's telling me. And then this sentiment indicator has bounced off of that low level here, but it's probably going to come right back down to it with today's move. And it can get below it too. So again, if we do end up breaking and really dropping here, it could get really extreme down on those lower levels. All right, let's take a look at the charts. So now you can go make your sandwich if you want, if you're bored with this. But all right, let's identify again that some of these critical levels. This big reversal day on February 24th. Look at the intraday low today. No question that it was going to at least pause right there. That's a massive support area. Right in here is a critical support area. I talked about how the buyers came in on this day, pushed it right up right from the open. They pushed it up again here. 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 And we don't know what's going to happen here. Here's the resistance level up here. Now, remember on Tuesday, we were starting, we had the bullish reversal candle on Monday. We were sitting right at this level right here where these buyers were coming in. We were sitting right there on Tuesday. And I said, well, okay, we know what will make us bearish. If we close down below these lows, we did trade below these lows right here, but we didn't close below. If we close below those lows, is that going to trigger panic selling? I don't know yet. I mean, we've been so resilient holding up right here, but the problem is that although we've been really resilient holding up, we aren't going any higher. If you think of a climber hanging on the cliff, and he managed to go up, climb up a little bit, but then he slides back down, and he climbs up a little bit, he slides back down. All the time he's just barely hanging on with his fingertips. Well, each time he climbs up and he slides down, he's losing strength. He's losing, he's not getting stronger. And at some point in time, his fingers are going to give out, and he's going to fall. It's going to drop below that level. And I just don't know how long can that climber keep doing that? How long can that climber hold out? I don't know. I can't predict exactly the timing of it. It's not looking good that he's going to be able to hold on, and the market's going to be able to hold on each time it fails to take off. I mean, each of these bounces here, yes, buyers pushed it up right at the spot right here, but it didn't go very far. Here, it did go pretty far here in March. We know that. But here, this is a quick bounce. Here was a quick bounce. If we get below this level, this 410 level, and close below there at some point, where it's going to trigger and it's going to snowball. And by the way, what's also happening right here, remember, what creates panic selling is a couple things. Number one, it's when you're so convinced that the market is going up that when it starts dropping and you're like, wait a second, it can't be dropping. It was for sure going up. It can't be dropping. And that creates that panic selling, where it's just get out. I don't know why it's doing this. Just get out. I don't care what price. I'm losing money. Get out. Another thing that can create panic selling is just confusion. We had this big drop here on Friday, and traders were like, "Oh crap, are we gonna drop?" Everyone keeps talking about this 410 level. By the way, I'm not the only one talking about 410, so we're not unique here. You're not an insider here, knowing something that nobody else knows in the world. Any professional trader knows how to read a chart and has been paying attention for the last couple months knows exactly where this level is and exactly how much it's been holding up. But it dropped to that level on Friday, and then it started to break through and then reverse. And then we had the Fed news, had this huge day after the Fed news. And what was everyone talking about yesterday? It's like, oh, we're in the clear. The Fed is telling us we're fine. Everything's fine. We're going to be okay. There was huge volume, huge. There was like a 4-to-1 or 5-to-1 advancing to declining ratio going into the close. It was massive. So there was so much participation going into the close. What was the problem, though? Well, we were stopping right at this resistance level. And then today happens, you gap down, and then you just completely wipe out what happened yesterday. So what's going on now is traders like, I don't know what to do. I don't know what, should I hang on? Should I buy more? They're not buying more because every time or if they are, it's tepid because it's not causing it to break out of that range. They're not panic selling yet because it's not breaking below this range, but they're confused. We've had all this whipsawing, and it goes back further than that. It goes back to, the week before we had this sell off here and then bounced off of it and down to here, and we're just going back and forth and back and forth. And what's going to happen is you get below 410, and these people are going to be like, I don't know what's going on here. Just sell, just get out. And that's what's going to just crash, because then it's like, I don't know. It's like, what is your reason to sell? There's no more reasons to sell or no more reasons to hold anymore. You're like, I thought this was a good valuation. I thought the stock had come down far enough. I thought, hey, it can't go down any further compared to how much it can go back. Look at Netflix. How much further can Netflix drop? But if it goes back to where it was before, I'm going to make a killing. There's so much of that going on right now that at some point it's going to be like, oh, who the hell cares? Let's get out. I don't know how much further Netflix is going to drop. And that's what we're waiting for. We don't know where that is, but we're getting close to that. You're starting to feel that build in the market. And that's what I'm trying to prepare you for the last few weeks. Actually, the last few months, we've talked about this on and off as we've gotten these sell-offs, and we're building towards something big. We just don't know when the linchpin is going to get pulled, and it's going to just drop. And to be honest with you, I can't leave out the possibility that maybe we rebound. If we hold here today and don't break below 410, who's to say we can't have another rally back up to here, or even possibly even break up higher? I still can't say there's not a possibility we can't go higher right here. It's just that it's getting harder and harder for me to find any reason why the market is going to rally from here, and it just doesn't feel like a bottom yet, to where I could say maybe this isn't the bottom, but it's close. I'm not even there yet either. It's not even close to possibly being the bottom based on my 20 plus years of doing this, 25 years of experience. So these are the levels. These are what we're focused on, and that 410 is going to be critical. And it's not just the S&P. All these other indexes have those same levels that are critical. The Dow is actually down here a little bit on that February 24th reversal day, but it's also held up better throughout most of the decline anyway. But that could mean it's got to catch up. The Dow transports have already broken below those lows. That tends to be a leading indicator for the industrials. Does it mean we start to see some days where the Dow is dropping faster than the other indexes? I think so. I think that's going to happen at some point. The Qs, they've already broken below it. Technology has been a leadership group. We talk about the chip stocks being, a leadership group, but the Nasdaq 100 is getting hammered today. A much stronger, higher percentage drop than the other indexes. Now here's the Monday reversal day right here. Well, we're already below the February 24th low, so we're already in that critical spot with the Nasdaq 100. We break below Monday's low and look out below. I mean, now the next level, just to get an idea here, if we look at the Qs, or is it just to be aware of where the next level of support is? Boy, we got to go back 2 years here. It's going to be right in here. Around probably that 303 area, somewhere around there. And who knows if that's even going to hold. That's just giving you another target to look at. But if you remember, in fact, let's stay with the longer term chart here. If you remember a few weeks ago, or whenever it was, I should just take notes every day from every update so I know exactly when I mention things, but that's too much work to try to do that. But a while back, I said that I felt like this was probably wave A, this was wave B, and if this is going to be wave C, we need to get below this low right here where we're starting to see that. And I felt like we're not going to get panic selling until we get below this low, and then it's a matter of how far down. 400 is an area that could be a little bit of support. But a lot of people are looking at 400, so I don't think that's going to be the support. Now, it could be one of those things where you get to 400 and then do what we did on Monday, where you sell below it. It just really panics everyone. Then it rebounds right back up to 400 to close the day or something like that. You get some sort of massive reversal day like that. I don't know how it's going to play out, but sometimes I'll walk through different scenarios so that I'm not caught off guard. It doesn't surprise me if something like that happens. Again, so when I throw some of the stuff out, I'm not trying to be Nostradamus. I'm just trying to, based on experience, try to look at different ways that markets have bottomed in the past and how they've acted in the past, how these panic sell-offs have acted in the past. And I try to just get some different scenarios in my mind to where if it starts to play out that way, it's like, okay, this makes sense. It's not any different than preparing for a football game or a basketball game where you're saying, okay, here's the other team. This is what they typically do. If they do this, they run this play that they like to run. I'm ready for it because I've seen it. I know what they're doing. I can react then at that point. It doesn't mean that I know they're going to run it or I know when they're going to run it. It's just that you're preparing yourself to recognize things when they happen. And that's so a lot of this jibber jabber I do during class when I'm looking at different scenarios, a lot of it is just that. It's just preparing myself. And that's what I did right here on the S&P. I said, okay, I haven't ruled out the chance that maybe we do hold right here today and we whipsaw again and we break out above here. Why would I say something like that? Well, because I want to make sure that I'm not saying this is an impossibility, that it can't do it. So if it does do it, it's like, okay, we've been whipsawing back and forth. This hasn't made a lot of sense right in through here. When we had a day like, when you had the participation like yesterday, 90% of the time you're in most market conditions, you're going to get a follow through day to that, or maybe a follow through week to that type of a move. But the lower probability thing happens. So I've got to start looking at lower probability possible outcomes here too, and make sure I'm not caught off guard if they happen. What was it? Oh, question. What was the blue band at the bottom of the chart? This is you can move the chart back a day or two. So if I want to go back to March, see what March looked like, I can slide. It's a slide bar that you can play with the chart a little bit. So if I wanted to go back, see what it looked like yesterday, I can just go back there, one day right there. And so I'm like, okay, this is what it looked like yesterday. Was there anything in that told me it was going to drop today? Probably not, except that we're at a resistance level. I think that's what you're referring to. Is that what you're talking about? This down here, I think I had to pause. This little slide bar down here at the bottom. I should slide the chart back and forth. Oops, where did I do it? I got an overlay now on the thing. Let's see if I can get rid of that. All right, so the Russell 2000. Let's look at that one here real quick. Here's that reversal day right there. We've been below it. We've rallied back up to it, and now we're heading back down. None of these indexes have gone below Monday's low yet, but that's something we're watching for. And it may not happen today, although I'll be interested to see how we close. If we really accelerate into the close, that could end up doing that. Now, another thing to point out, you've heard me say this for a number of Thursdays before. If we have a big sell-off tomorrow, and if we break that support level on the S&P, remember what I always tell you: markets typically don't bottom on a Friday. And so maybe we close right at these lows tomorrow, but if we break below it, now again, it can be key with the candle, because if we break below it and then come off the lows, if we have a bullish reversal day like we did on Monday, because again, it's possible to bottom on a Friday. I'm not saying it's impossible to bottom on a Friday. It's just typically you don't. And in most cases you don't. I'd say 80-90% of the time you don't. But keep that in mind, because if we do have a big sell-off tomorrow, it's probably going to continue into Monday. Be prepared for that. We've seen it happen a number of times in the last couple of weeks. We've had a lot of down Fridays that have had some. Then we've had bullish reversal days on Monday. A couple of bullish reversal days on Monday. So just be kind of prepared for that. Now, I'm not going to spend too much time on the other charts. We did that in the market update. Bond markets still continue to move down. Big move down today, with the continued fears that there's going to be a recession. The Fed announcement yesterday just didn't make any sense. And I'm going to qualify this statement by saying, anytime you hear me talk about anything but the charts or the price action or the sentiment, it's not my area of expertise. So if I start talking about the fundamentals of a company, or what the Fed is doing, or what is happening in the economy, what the jobs report means, that's not my area of expertise, and you can take my opinion with a grain of salt. But what baffled me yesterday is that the Fed is coming out. They have a half-point basis rate, or a 50 basis point rate increase, which they haven't done for 20 years. They're already behind the curve. We've only had 0.25% rise before then. We're seeing everyone seeing inflation everywhere and only getting worse. And the Fed is saying, we don't think we're going to have to get more aggressive than that. Again, this is a Fed that's already behind, and what was scary to me is they're already behind. It's obvious they're behind, and they're saying, "Don't worry, we're okay. We don't have to go that fast. We don't have to raise rates that fast." I and then knowing that the Fed never has it, they've never been able to negotiate a soft landing. We talk about it all the time. Well, can the Fed do it? They've never done it. I don't predict things very often, but I'm predicting right here we're going to have a recession to get out of this thing. The only question is how bad is that recession going to be? Is it going? And as of right now, I think it just could be mild. There are a lot of strengths in the economy, and there's companies can't fill job positions right now, so you're not seeing layoffs and jobs problem yet. But we're talking about purposely slowing down the economy, and this, just like inflation can get out of control very quickly, things can slow down very quickly. How many of you in your own lives have already cut back on certain things? Maybe it's been real subtle. I'll tell you what I've done is I don't, we were subscribing to every freaking streaming service on the planet. And I finally just said, hey, look, let's just rotate these, that you could everyone's, I only have a few kids living at home still, but I'm like, you can still binge watch, but let's just pick a streaming service to binge watch for the month. Let's rotate them around. And I'm sure many of you are probably doing the same thing. And that showed in the Netflix earnings that's likely happening. And some of these other streaming services. That's just one example. I know a lot of people are going on a vacation because they've been, COVID. They've been pent up in their houses. They're dying to get that vacation, but because of how expensive that vacation is costing, it's worth it to go because they've been waiting for years to go. But are they going to go on 2 or 3 or 4? Probably not. So everybody's going to have their one vacation, and then it's tightening time again. It's like, okay, I'm going to go to Disneyland, but I'm not going to go to Disney World, or I'm going to go on a cruise, but I'm not going to go to Hawaii because the cruise I get to hit 3 different countries and their beaches. That's going to be good for me, or something like that. So, and that can happen very suddenly, where people start saying, and within a month or two, they start saying, I'm cutting this, and that's where you can start to see things really slow down. And what the Fed is saying is they're saying, oh, well, we haven't seen any of this yet, which might be true, but it can happen like that, like within weeks, that collectively as a group, we all just start saying, okay, we got to make some cuts somewhere. We got to slow things down somewhere. And then the economy screeches to a halt in that situation. And then the Fed has to say, okay, we got to start getting it back going again. So now I don't envy him. I would never want the job. It's an impossible job. But what I saw yesterday was this euphoria that didn't make any sense to me. And who knows, maybe the market flip-flops and goes right back up again, and I'm the idiot for not trusting what everyone else seemed to see yesterday. But I don't know. I'm just looking at my years of experience, and again, I'm not basing this on any sort of equation, or it's just what I've experienced. I've seen this happen. I've seen human nature happen, and it tends to have when this stuff tends to happen, it tends to have a bad ending before it gets better, a bad period before it starts to get better. Now that I've cheered you up on a Cinco de Mayo, let's move forward here. Gold, possible ABC pattern, but it's a bearish day today. It may still have a little bit further to drop within that correction there. Oil though does look like it's starting to break out of that triangle range that we've talked about, but it has a bearish candle today, so maybe it's breaking out, coming back to test it again. There are a lot of individual oil companies that have bearish candles, or bearish patterns actually, that look like they could have maybe a wave C down or something like that. Halliburton is an example. Let me just pull that one up here real quick because it's on could be an example of what I'm talking about. So, this could be wave A. Notice how it's trying to rally, but it's real choppy and sluggish. You got a bearish reversal candle here. That might be wave B, and you might get a move down for wave C. Now, would I trade that with a bearish trade? I'm staying away from that as a bearish trade because the sector is so strong. There's a lot of other, especially in these market conditions, there's a lot of other stocks that could drop a lot further. You take just the stocks that have been hammered lately, Netflix and Amazon, and there's others that are probably more likely to drop. I don't want to bet against oil, which is one of the few sectors that has been trending up or performing pretty well during all this, and betting that it's going to go down. But what it could mean is if I'm looking to buy into oil, I might wait until maybe it has one more move down. If it does, and then now you've got a nice little pullback, ABC pattern, and then you could be off to the races again. By the way, it's important that we stay focused on oil and keep oil stocks in our watch list, because we already know that demand is pretty high. Oil, the producers in the world can't keep up with demand, which is why the prices are inflated. And part of that is because of the war in Ukraine. We know that. But another thing to keep in mind is that China's on lockdown all over the place. People big portions of the population have been just stuck in their houses and doing nothing. When all those people start going back to work, as we get to the summer months and the virus kind of disappears again, that's demand for oil, huge demand for oil that we're not ready for yet. Now, again, when I start talking fundamentally, take it with a grain of salt. If I see it on the chart and I'm showing you on the chart, that's when you really want to pay attention to what I'm saying. But I'm trying to say there's a lot of potential for oil to keep going higher, and we want to keep these in our. We love that they're pulling back right now, and that they might even pull back further, because we could get good entry points in them. But do not take them out of your watch list, because we could make a lot of money on those in the next few months if they can get that sell off, and then we could ride that trend back up, because this is going to be one of the few areas that are going to move up despite the market collapsing or having problems. Although you could make the argument that if we go into recession, that it reduces the need for oil, but we're not there yet. I'm not saying we're in recession yet, or we're even seeing those signs of an economic slowdown yet. So we'll ride this trend back up if there's demand pick up with China, and ride that back up. Now, could the war come to an end and solve part of that problem that could flood the world with excess oil? Yeah, but I don't see any signs of that changing just yet. We got to trade what we see right now. The dollar continues to move higher. Had a little bit of a pullback yesterday, but it's right back to moving higher again. The VIX, again, we want to pay attention to this. I told you that we've got to get above these previous highs right here to be even in the conversation of a panic. We didn't even get close to that. Well, I could say you got somewhat close to it on Monday with that reversal. Look at the volatility coming into today. We should be right back to moving up, and this is up here in this level is where you'd want to consider the market getting into a panicky area. So again, as bad as today is, we're not seeing panic yet, and that's the scary part. Is it could get a lot more shocking. By the way, when you see the Dow down 1,000 points, we've actually been kind of conditioned with that, and I know there's percentages as the Dow gains more in value. It used to be that you saw 500. Well, back in 2008, we had an 800-point drop in the Dow. I'd never seen that before. It was just massive. It was like, oh my gosh, what is going on here? The world's coming to an end. And then we had the flash crash a little while later, and the Dow for momentarily went 1,000 points down. And I thought, holy cow. Well, obviously the Dow has gone higher than that. And so the 1,000-point drop is not the same percentage drop as it was during the flash crash or the financial collapse. So we're going to have to recalibrate a little bit, but it could be that we see the Dow down 2,500 points or 3,000 points could be the level where we're like freaking out, like, oh man, what is going on? So usually in a panic sell-off, you'll get a day like that where because that's what creates that feeling of holy crap, how much further is this going to drop? I've never seen this before. How much worse is this going to get? And that's when you know you're getting near a bottom. Is you're getting shocked. There's that phrase, you want to buy when there's blood on the street. That's when there's blood on the street, is when you're like, how can this be? And I know the Dow is working its way toward it. I mean, we're down almost 1,200 points now, but we'll see. SMH is the chip sector here, making another move down off of this little correction. It's already been below those lows in February and March. It tends to be a leading indicator of the NASDAQ 100. By the way, this is why I'm back in that SOXS trade, that inverse ETF. That's going to be my hedge. We'll go through the portfolio here in a second. Transports looking like they're getting ready to break support. Bitcoin's having a sell-off. It's looking more and more bearish today too. Pretty ugly out there. Let me go through the individual stocks here to put in the watch list, and then we'll look at the portfolio real quickly. Under computer and tech, again, we've got a lot of stocks already in the watch list out of these lists. So it's if I'm moving down on the list, it's not that there aren't stocks in these areas. It's that the ones that are nice, I already have them in the watch list. I also went through the watch list and booted out some patterns. And when I pull up that watch list, I'll try to pause it so that you can see, compare it to what you have in your watch list to see which ones I booted out, just because the patterns just were falling apart and no reason to keep them in there anymore. I wasn't interested in buying them anymore. But under computer, and again, these are just, we're going to put them in the watch list. It doesn't mean they can't fall apart or look worse later on, especially with a panic sell-off. But we want to at least be prepared with some companies that look interesting right now. Under computer and technology, the CUTR 97 strength rank, Cutera, I think it is. Now, again, it's got a bearish candle today, but I like this huge run up right here, and I like this pullback. It looks like an ABC pullback right here, about a 50% retracement of that previous move up, and then had a nice little reversal here. Again, a bearish day might not be done going down, and it might be one we boot out later on. Let's switch just the signals here. But it's, it looks, if the market does rebound here and go higher, like I said, it's possible it could happen. I want to be ready to take advantage of it. I can flip flop with the best of them. I'd be a good politician because I've conditioned myself over the years to, 1 week I'm bullish, next week I could be very bearish, and next week after that I could be very bullish again. I'm too good of a person, though, to be a politician, so it just wouldn't work. All right. I can flip-flop, but I'm not too comfortable with the lying part, so that probably disqualifies me from being a politician. All right. Business services. I like this EXLS 93 strength rank. Again, it's down. It's gone back to a sell signal here. But what I like overall, again, you got this bowl-shaped move that broke out, and then it's just kind of pulled back, a little bit of a choppy pullback right here. Now, you're not quite at 50% of this run up, so it could drop a little bit further here. But again, just kind of keep an eye on it, see if it can find some support in this area down around here somewhere. And if it starts to move up, I like these bowl-shaped moves. And if you get the market conditions improving and it starts to take, at least you can start to take off. So you want to pay attention to some of those. Now, some of these I went over on Tuesday with you, but there's a lot under the consumer staples category. Now, one of them, I think I'd mentioned it. I didn't mention it in class. I think we're out of time, but I ended up trading it. Was ADM, Daniels Midland, 91 strength rank. This is a big agricultural stock, and we've seen a lot of these really take off along with the fertilizer stocks. Although some of them have been weak a little bit lately, they could pull back a little bit more, and this might be the same. But it looked like you had a little bit of an ABC pattern right here, big run up. Looked like an opportunity to get back in. It's now I got in and then I put a tight stop right below here because I felt like if the market's going to rally, because we had that bullish reversal day earlier in the week. I'm like, okay, if we do rally and go higher, I don't know if we will. This is a stock that's definitely going to go with it. If it doesn't, let's keep a real tight stop on it, and I don't lose very much. And so maybe today I end up stopping out. Maybe it's tomorrow. Who knows? I wouldn't be jumping into this one, but I would keep it in a watch list because even if we do go lower, it could. I mean, here's a 50% retracement down here of that run up. It could still drop down this area and then be even a better entry point if the market turns around or bottoms out at that point. Actually, a 50% retracement is even further down. I mean, look at this big run up since December. That's about right in here. So there's still a lot further this thing could drop and still be a nice correction within an uptrend. So we'll just keep this in the watch list. I don't know if I already have it in there. Let's go ahead and put it in before I forget. Another one under consumer staples here was Hershey's, 91 strength rank. It's actually holding up decent today, although I don't know how well that's going to keep pulling up. But, again, nice steady run up here. Look at that. And then this looks like maybe an ABC correction. And then it's starting to move back up again. Now, sometimes ABC corrections can, remember, there's two ways I describe a correction. I describe it as an ABC, and I also describe it as choppy and sideways, right? When you've gone through the trainings, I talk about that and talk about trend analysis. So a lot of times you'll get that one of the characteristics of a pullback, you get the initial sell-off. It'll look like the buying opportunity. You get wave B, which is a sucker's rally. Then you get the flush out move for wave C, and then you take off again. But you can also get multiple moves because corrections can be a period of indecision. So you could get what looks like wave A, wave B, wave C, start to move up, and then it could still kind of chop back and forth a little bit before then taking off. That maybe is what's happening here. It looks like you're getting a little bit of a bearish reversal candle. Maybe it's still kind of choppy. Maybe it comes down here, but as long as it looks kind of corrective still, back and forth, you just wait for that to end and wait for it to start trending back out, wait for market conditions to improve, and this thing can start taking off again. So we'll keep it in the watch list, see what happens. I might already have it in there, but I can't remember which ones I put in and which ones I didn't. Another one in consumer staples. And now we're getting a little bit below the 90 strength rank here, but Coca-Cola. So maybe you sacrifice a little bit of the strength rank with the largeness of the company. There's not a lot of Dow stocks that get into the 90 strength rank, or a lot of these larger companies that make it into that higher strength rank. So I tend to use a relative basis to some of these. Obviously, you got a nice strong trend in Coca-Cola right through here. It looks like possibly an ABC correction, big move up. Obviously, everything had a big move up yesterday. Hasn't had too big of a move down today, and it could still go low if the market goes lower. But it could come back. Notice how it came back to this breakout area right here. If that holds, it might end up going higher. Remember, consumer staples, these are products that people are going to use no matter what happens in the economy. So, they're saying, well, the economy could be slowing down. Well, I mean, you already get free refills at the at the burger joint, or you're going to say, well, I'm only going to have one drink today because, we're in a tough times here. I know the refills are free, but I'm going to do my part and only have one drink today and not refill my drink. No, these are products you're going to buy no matter what. In fact, you'll probably cut out the fries before you cut out the drink as part of your Happy Meal, you know. Um, all right, another one in this group. I know I mentioned this one on Tuesday, was Tyson Foods. Again, 85 strength rank, but you're seeing very similar patterns here. Although this was a little bit deeper pullback, but again, you got kind of this bowl-shaped move. ABC started to move up yesterday, might not be done moving down. And again, if this thing gets too much lower, we'd probably boot it out. But for now, we'll keep an eye on it because we don't know if the market's going to hold right here and maybe start going up. And if it does, everyone will be saying, thanks, Jerry, for wasting an hour of our time rattling off about how bad the world conditions are. And I'm going to have half my class slitting the wrist by the end of, by the time I'm done. All right. That's it. That's it as far as that's concerned. Let's take a look at the portfolio. We're actually improving. We're gaining. How can that be? Well, a lot of it is our hedged position here, and we're in stocks that are still holding up very well. I mean, and that's the whole point of this is, you know, stay in trends that are outperforming the market. We've talked about aerospace and particularly defensive stocks. It's a no-brainer. The world's needing weapons right now, and they're probably going to continue to need weapons. And these companies are really have not. They're undervalued still. They still have room to go. These aren't going to be immune, though, if we have a panic sell-off. Almost everything starts selling off if that happens. But until then, you know, this is still holding up pretty well. This is a nice sideways consolidation. By the way, if this breaks out, let me draw better lines here. If this breaks out, we're in a sideways range like this, and it breaks out of it, the rule of thumb is you can take the top of the range to the bottom of the range and project that distance upward, and it can give you an idea of how far that trend could continue after it's done. Now, again, it doesn't guarantee it will. It doesn't mean it's going to go straight there immediately. It could take several months. You know, it could start to move up and then come back and retest and then move up and then go sideways for a few weeks, but it will tend to go that distance. And again, something doesn't become a rule of thumb if it never happens. It happens enough times to where it's like, hey, that's something that I need to pay attention to. That's what this is. It's we want to pay attention to that. And again, if it breaks out, we could be sideways in this range for, you know, we go back and forth for a few more weeks as well. So. But I like that pattern. I was just chuckling at a comment. All right, let's go to our portfolio here. Now, this is one that I've liked because I like kind of that bull. Let me go back a year. You can see the bowl-shaped move a little bit better. You got a cup with handle formation here on car. This is Avis rental car. If it breaks out of here, it will tend. This also has a rule of thumb. It'll tend to go up about the distance of the top of the bowl, the bottom of the bowl. Talking about, you know, $435 or so. Again, maybe it's higher than that. I'm just spitballing right here, but because of the market conditions we're in, I think I had a tighter stop on this. Let me zoom in again here. I think I put my stop, well, maybe it was below here. I'll have to look. It was either below here or below here. Either way, that's pretty close. I may end up getting stopped out of that if the market starts tanking here. But again, I should make up for it with those other ETFs that I have. Oil, we looked at the chart of oil. We had kind of broken that symmetrical triangle pattern, but we have a little bit of a bearish candle today. But again, I want to own oil. I'm really going to try to hold on to this one. because with the back and forth, it should break out. And by the way, you get this big breakout again, triangle patterns like this when they break out. You can take the base of the triangle and project that from the breakout point. That's another rule of thumb you can use. So there's reasons to still be optimistic that oil is going to continue to trend up. Natural gas or coal, not coal. Well, coal and natural gas, you'd want to have some exposure to. This is a coal. This is what I entered in just last Tuesday, I believe. Not great movements here since then, but it is breaking out, and it could still pull back a little bit. You have these sharp sell-offs that took place, but overall, I think demand is there, and I want to continue to hold that. So we've got a lot of energy exposure. Here's Archer Daniel Midland. Like I said, I might end up getting stopped out of that one, but I'll keep it in the watch list. I can always get back in. And then let's get to our hedges here. This is the opposite of the semiconductor index. So as the semiconductors go down, this will go up. Let me just bring up the SMH chart again real quick to see why I jumped back into this. Now, I got out of it yesterday. I flip-flopped out of this because, again, when it moved up and the markets, I don't know if the market's going to break out. This has helped us a lot when the market has dropped, but it could also make big moves against us if we hold these when the market's rallying, and especially if the other stocks that we're holding aren't rallying very strong, which they weren't rallying strong yesterday. They had decent days, but they weren't like really taking off like some other stocks. So I was out of those. I jumped back in again. Here's the SMH. Here's how it looked yesterday. But now you got this bearish reversal candle. You're below that. You're now back below the support area here, looking like we could drop again. If it flip-flops again, I'll jump back out. Remember, I'm not basing this one off of charts or signals. It's purely as a hedge. If the market's going to go down, I want to make money when the market's going down. Why not? And this is a good way to do it. It's been a great way to do it, and hopefully it's something you guys are considering in your portfolio. Because again, there's other ways too. You could buy put options, protective puts, and if you know how to trade options, you know how to buy put, you can do that as well. That works. But if you don't really want to get into options, and you have a long only mentality, you only want to be long. You don't want to short stocks either. There are these inverse ETFs that will go up when the market goes down, and it allows you to still be long. I'm buying this, expecting it to go up, but it'll go up as the market goes down. It's a great way to hedge your portfolio. So I'm in that one, and then last one is the SARK. This is opposite of Cathie Wood's ARK Innovation Fund. ARKK is the ETF ticker symbol. She likes to invest in these up and coming these companies that she thinks are up and coming and are going to be huge later on. They might eventually be that way, but this fund has been hammered, as you can see, and that's why there was a group of traders that set up this ETF to go against her fund. Didn't make her very happy because they're shorting what she's doing, and she's got holdings like Tesla. She had Teladoc as a big holding. We all saw what Teladoc did on their earnings. They got hammered. Tesla is under pressure because Elon Musk might have to sell his stock to pay for Twitter or to finance Twitter. A lot of reasons to still be bearish on this one, and it had a little bit of a bounce here. Now it is oversold. I mean, that's one thing to keep an eye on too. Is we have been and we're getting close to this reversal risk area. But this one looks pretty bearish, and so the opposite of that is the SARK, SARK. And we're betting against it, and not just blindly, not like I have anything against Cathie Wood, but I've got to look at the opposite of that. Looks like a very bullish pattern. You got a bull-shaped move right here. You're starting to break out. You pull back, and now you have a nice big bullish candle break back above the breakout point. Look out! That thing looks like it's going to take off and go further. Should benefit us. Now, again, you could say, well, Jerry, if the market is selling off and we're losing money on on these positions, but we're making money on these positions. Isn't that just treading water? It could be. Okay. The alternative is, okay, well, let's just get out of everything and just wait. But remember, we've been very careful to focus on the strongest sectors that have been going up despite the market having its weakness. And so what we've been getting is we've been getting stocks that when the market is going down, they're not going down very much, but these are going up big. And then when the market is going up, these are continuing to go up, and then we're getting out of these so that we're not offsetting those gains very much. We're flip-flopping on these. And we're not getting huge gains in the portfolio, but we're making money on it. And it's causing a little bit more, or this is why I hate these market conditions. So what have we been doing in the last week? We're working twice as hard for little money, right? But that's what happens sometimes in the market. In these whipsawing conditions, you're going to work hard and it's not going to pay off. But it will, because we're not losing. Other people are getting hammered, and they're going to have to spend the next rally and the next bull market making up for all the money they lost. We might be 6 months into a bull market before they're breaking even, and we're going to start making money as soon as the bull market starts kicking in. And then it's going to be easy because we're going to pick those top stocks, we're going to load up, and then it's going to be boring in class because I'm going to be like, yeah, we're still holding these positions. Yep, we're still holding these positions. We're fully capitalized. We don't have cash to get anything new, so we're still holding these positions. But the good news is you're going to see this number just start skyrocketing, and that's when it's really fun because you very little work and you start making a killing. But why do we do these classes? I want to teach you how to manage this. You can just go with the buy sell signals and simplify it, but I assume if you're in this class, you want to learn how to do more. Because if you could do more, you can get better results. You can always get better results the more education you have. I don't care what field you're in. It's true across the board. You can get better results the more educated you are in the field that you're in. Comment here. Yeah, maybe you might be at a broker's account that won't let you trade inverse ETFs. And if that's the case, then you might have to just go to cash when things start getting ugly, or I hate those types of funds that restrict some of that stuff, because it's like, it's like tying your arm behind your back, especially if you know what you're doing. Usually they do it. They say they're protecting people, but that's why, man, I tell you, even if you don't want to be a trader, it's so important you learn how to some of the basics of this stuff. Because if you leave it to some of these fund managers to do all of it for you, those are the people that take the biggest losses when we have these massive sell-offs, because they're stuck with these people that have to be long the market. They don't want to be in cash because they get yelled at for being in cash, and so they stay in positions too long. They get hammered so bad that when they finally have to panic sell, and that's where you get the panic sell-ups. All right, I got to wrap things up. Again, a reminder for those that joined late, I will be out of town next week. I still plan on doing classes, but they're going to be recorded classes. They'll be posted. Just taking a quick look at the S&P here, a little bit off the lows, but we're still threatening that lower level there. We'll see what happens this last hour. So don't show up to the live class next week. I'll have to get on there and move the calendar so that nobody shows up, but or that doesn't let you come in, because then you'll be waiting around and get mad that I'm not there. But so be aware of that. And I don't know when the recordings will be posted. So just kind of keep checking throughout the day. Probably later in the day is more likely than earlier in the day. And then we'll be back to normal the week after that. All right. Thanks, everyone. Have a great week. And we'll see what happens tomorrow. If we break that level and we sell off, remember that markets will typically bottom on a Friday. We'll see what happens on Monday and kind of go from there. All right. Thanks, everyone. Have a great week. Bye now.